Well, I think the Federal Reserve has the economy right where they want it. The economy is resilient, but it's moderating. I can see that most vividly in the job market. Job growth is slowing. Wage growth is moderating, more consistent with the Fed's inflation target. Inflation's coming in. It's still high relative to the Fed's target, but all the trend lines look very good. I think they feel very good about where inflation is headed. Financial conditions, I mean, except for today, I thought, they had the stock market and the bond market and foreign exchange, roughly where they wanted it. So it feels like Fed's getting exactly what they want. Everything's sticking to script. And with that, I think they will have an opportunity next year to start lowering interest rates. At this point, I think it's not a question of will they raise rates. That question has been answered. It's now a question of when will they start cutting rates and how many times will they cut.
And what's your sense? Do you think the dot plot is something to go by with right now, or could there be a surprise depending on the data, or perhaps the Fed could rework the schedule because of the elections slated in November? Because the debate there is whether you go 15 July or 25 July and September.
Yeah, it's a lot of moving parts there. I mean, my sense is that they're not going to start lowering rates until they're absolutely sure that inflation is sticking to Zandi's script and it's going to be back to their target by the end of the year. If that's the case, then I think they start cutting rates probably next summer, let's say June, at the June FOMC meeting. Maybe another rate cut in September. But, you make a good point about the election. I think all else being equal, I think the Federal Reserve would rather not have to change policy, because once they do, they run the risk of getting caught up in the election and get politicized. And I think they desperately would like to avoid that. They may have no choice. I mean, the economy and inflation may so strongly argue for rate cuts that they'll just have to move. But all else being equal, I think they'll probably be reticent to cut rates, quickly next year, change rates at all. I do expect that as you get into 2025, I think they'll have enough evidence at that point that inflation's back in. The economy needs lower interest rates, otherwise it'll start to falter. And I expect some 3, 4, 5 rate cuts in 2024. But next year, they might take I expect a rate cut or 2, maybe 3. That's what they're saying, but I'm a little skeptical in the context of what the election might mean.
And it's not unusual, is it, Mark, for there to be a disconnect between what the market wants and expects and what the Fed is trying to tell us. So if they're saying, possibly 3 cuts in 2024, and the market is currently pricing up to 6 cuts with a 75% probability of a liftoff in March, maybe there's the risk that the market's going to get disappointed here.
Yeah, I think so. I mean, markets are up and down and all around, Mandy, as you know. I mean, it wasn't long ago that they were in a very different spot. So I'm not sure I put too much weight on market expectations. But you're right. I mean, as of today, investors appear to be very optimistic about the rate cutting next year. I'd be very surprised. So, I wouldn't therefore be surprised that at some point when market expectations shift back, that we see stock prices weaken a bit and bond yields go back up again. So I think markets, it just feels like they're getting a little ahead of themselves. But, that's not atypical. That's what markets do.